Right, so this event is probably brought to you by CiRCLELiNKS, LittleWhiteB2B, and 1exchange. So before we start, allow me to give a short introduction on the organizers today. All right, so CiRCLELiNKS is an online business networking platform aiming to provide our members the resources they need to expand, to grow, and to help solve their pain points. We provide business matching services in Taiwan, in Thailand, Malaysia, Singapore, and many other areas. A Little White B2B is a startup community based in Hong Kong, currently in collaboration with CiRCLELiNKS to provide cross-border business matching and foreign exposure for startups and Hong Kong companies. And our guest today, 1exchange, is the world's first fully regulated and licensed private securities exchange in Singapore, and the preferred regulated venue for companies and investors to list and trade this private securities in a transparent, fair, and orderly manner. All right, and our topic for today is fundraising and exit options for SMEs and growth companies in the new normal. All right, so as founders, business owners, and company directors, are you seeking growth or expansion capitals for your company? Or are you looking for greater accessibility and tradabilities on your company shares? Or are you seeking a transparent partial exit or retaining control of the company, benefiting your early investors, employees, shareholders, partners, and incoming investors? So globally, SMEs account for 9 out of 10 businesses. With the ongoing COVID-19 pandemic, what are some of the options can business owners explore beyond the traditional bank financing? All right, so we'll be welcoming our speaker for today, Mr. Choo Haiping, to share his insights with us. Mr. Choo is the founding members of 1x platform. At 1exchange, he leads the team, oversees the strategy, development, and execution of 1exchange platform. So previously, Haiping was the senior vice president of CapBridge, a capital raising platform for global growth companies. Right? He was also the senior investor director at ClearBridge Accelerator before CapBridge. So Haiping is highly passionate about entrepreneurship, having founded 2 successful startups as an undergrad. Haiping is also the recipient of several international business awards and holds a Bachelor of Engineering in Material Science and Engineering from the National University of Singapore. Now, Haiping, let's get started. The stage is yours.
Thank you, Zach, for the very wonderful introduction. Good evening, everyone. Very happy and very honored to be presenting here today. So today I'll be covering mostly on the fundraising as well as exit options, and hopefully I'll be able to share some of the learnings that I've learned over the years, as well as introduce the new way of doing stuff, which is what we have seen at 1exchange and also at CapBridge. So without further ado, let's get right into it. I'm sharing my screen now. Going to full screen right now. Okay, so I think today's topic is really about fundraising and exit options for SMEs in the new normal. The new normal being, of course, COVID. It's a very unique situation that we are all facing right now. So we have seen a lot of companies looking to fundraise, looking for liquidity options. And we just wanted to give an overview about what are the existing options, as well as introduce new options that may be relevant to you in either your fundraising or your liquidity journey. Before I go into the presentation proper, I'd like to give a quick introduction about myself. So basically, I started my career in private equity and venture capital. And basically what I've done is that I'm basically investing in private companies and taking them public. So I was very lucky to build a portfolio of over 10 companies, and we managed to be very lucky to IPO 3 of them, 2 of them on the Singapore Exchange, and the last one on AXX, which is the Australian Exchange. So throughout the activity of starting companies, fundraising for them, and doing an IPO for them, as well as doing M&A for them, we realized that there was a lot of pain points that founders, SMEs are facing. Not only their CEO, but also their board of directors, their chairman, and even their CFO, and even their executive team. So what we hope to do is that we actually wanted to create a platform that will then help other founders, other executives, other board members to have a more smoother journey in terms of their financing and liquidity needs. So what we did is that we've actually started 2 companies that you see on the slide here. we started CapBridge, which is an online investment platform. So what CapBridge does in a nutshell is that we help companies fundraise, and then we typically help them fundraise from $5 to $20 million. What we typically do is that we help companies create what we call an online profile. We then run events, and we then schedule these events with our investor base. And we also help to position the company to find investors from not only entity all the way to individual investors. We are licensed in Singapore, and of course, we are supported by the MAS as well as the Singapore Exchange. What's very interesting is that we've also created what we call a private exchange, and I'll actually delve this deeper later on. But where we see the market need is that we see a market need for the ability for companies to do a more cost-effective, a cheaper, and a more streamlined listing where their shares can be traded. Because we see that once you're able to list and trade shares, we do see increased investor activity, as well as allowing the business owners to unlock the value, the true value of their shares. So in a nutshell, we do have two entities. One of them is the syndication or investment platform. The other one is the trading platform, 1exchange. Both of them are licensed and based headquartered in Singapore. So again, this is really the investment platform, but it's essentially the matching platform for both investors and companies. So if any company want to fundraise, we can help you do so. And the exchange is really to help your companies be listed. And when we mean by listing, we are taking some of your shares, we put them on the exchange, and buyers and sellers can then trade your shares for liquidity and for ongoing valuation and monetization. We have been featured on very prominent media, as well as we are being supported by a very strong base of investors. So on the top right side, we have SGX, which is the Singapore Exchange. We have Hanwha, which is one of the largest banks in Korea, as also our shareholder. Cyberport in Hong Kong, as well as AMTD, one of the largest investment banks this part of the world. They have done many deals in this part of the world, as well as in US. So we're able to leverage our partners to expand the investor base for both our platforms. So moving on to an overview of what is traditionally occurring today, we see fundraising as a key activity for all companies. So by and large, most companies, they start off as a startup. They have very limited paid out capital. And you can see from the diagram on the left-hand side is that they normally need to raise financing from angels and friends and families at the initial period of time. And hopefully, if everything does well, the company will then have its profit increase, will have revenue. And it'll come to a point of time where the company will then need to raise money in order to meet further objectives. And these further objectives can be in order to increase the cash flow. It can be to improve the digitalization. It can be used for further growth, for market expansion, or in this day and age, with COVID, in order to build greater resilience. So fundraising is a key activity that I think most of you are very aware, and I think most of you are very that most of you will need to come across at one point of time or the other. There are also other reasons why companies fundraise. Sometimes they want to convert their stakeholders into shareholders. And that's also why sometimes if you have more stakeholders and shareholders, you're actually aligning your customers, employees, and partners. So for example, a company that wants to better motivate their employees could potentially issue shares and sell their shares to employees. And then employees are then motivated to work harder because they now own a little bit of the company. Another example can be a company can issue or sell some shares to their partner who can be in the same value chain, so that the partner is also incentivized to provide more service or value-added service to the company. The third reason why some companies fundraise is, of course, to increase their loan-to-equity ratio. In general, most companies would maximize their loan ratio first, because loan is, of course, the cheapest way for that. But at one point of time, you cannot really expand anymore because the banks will question you, and then you need to increase your equity ratio. So that's also when companies also need to fundraise and get more equity into the company in order to rebalance their equity to loan ratio. A very common reason also is to raise our profile and also to increase the confidence level. So this goes hand in hand. So sometimes a company, when a startup or SME, announce to the world that they have raised 50 million, they've raised 100 million, it gives a lot of confidence to users and stakeholders that this company is well funded, they will sustain itself, and they can continue for at least a good couple or more years. So in Singapore, for example, we have many fintech firms or robo-advisors, and typically, how much company this startup have raised is one key consideration for clients who choose to put their money into these robo-advisory firms. And lastly, one of the key reasons for fundraising is really to help the company prepare for an eventual exit. So as a business owner, you have built your company from 5 million to 10 million to $100 million. You may not be there yet. You may not be ready for an IPO or a strategic sale, but you do want to fundraise in order to sort of solidify your current valuation at that point of time, as well as learn how to communicate to investors, how to do investor relations, so on and so forth. So in summary, I think fundraising is a very key activity for very practical reasons, as well as for very other reasons, such as raising their profile or preparing for eventual exit. And it's something in which I think all executive team, all CEOs, all CFOs, all board members should be able to appreciate and understand the pros and cons of different type of fundraising. Of course, in parallel to a fundraise, it's also the opportune time for business owners to also sell their shares. So what might happen is that if the company is raising $10 million, sometimes some business owners that have some existing shares, they may also want to sell $1 or $2 million to pay for their life needs, maybe to get a house or get a car, or to monetize a little bit of their shares for their life events. And lastly, on the bottom side, we see that there's actually two types of fundraising. One is the public fundraising, as you can see here. And typically you raise money privately first, and this can be from various sources. It can be from angel investors, it can be from venture capital firms, it can be from private equity firms. Most of the time, you cannot advertise to the public. It's a very regulated activity. You may get into trouble if you try and sell your shares to too big investor base. And then we have, on the other hand, we have the public fundraise where you go for full IPO, or we call it initial public offering. You issue a prospectus, you do a roadshow, you invite everyone to participate. It's very expensive and it's typically for larger companies. So just to give you some numbers, most companies, even in the Union Board of Singapore, which is we call Catalyst, normally you have to spend 1.1 million to 1.5 million in this exercise, the public fundraising IPO exercise, as well as spend at least 100 to 200K a year to maintain an IPO listing. So typically, it's only for larger companies who are raising a larger amount of money, because if you're raising 10 million, you spend 1.5 million on the fees, it doesn't make sense. And it's also for companies which has been operational for some time, and they also need to provide some form of liquidity to shareholders, because whenever they invite their shareholders or the founders themselves have built the company, of course they want to benefit from all the hard work and sweat they have put into the company, and they want to sell a little bit to pay for the life needs. So in general, these are what we call the traditional financing, or the traditional methods of fundraising. They are divided broadly into private and public, as well as the different sources of funds. One key difference between private and public is that typically in the public fundraising, you are getting more liquidity. So liquidity is just, for the layman understanding, is that the ability to buy and sell shares. So once you're listed, it's very easy for founders who own shares to then buy and sell shares accordingly. So sometimes if they feel that they need cash and sell shares, sometimes they feel that they want to invest more in their own company's future, they can then invest more shares. So there are certain key considerations why companies would want to fundraise. And I think the main key consideration are as follows. Obviously, I think some key consideration is whether the company is able to access the investors that they want to access. So some companies lend themselves very well to PE/VC funds. In other words, they may be in a very hot sector. So if you are a fintech company, if you are an e-commerce company, if you are in a very COVID resilient company, basically your company type is very aligned with what the venture capital or the private equity funds are investing into, then it may make sense and it may be cheaper for you to invest or rather to raise money from private sources. However, for the vast majority of companies, the public market may be the only way to go. The other reason, as I mentioned just now, is liquidity. So if many of our shareholders, if a company has been operational for 2 or 3 years and up, and a lot of them are looking for liquidity, then the only current option that you have now is to go for public fundraising, and that's the only ability for your investors and shareholders to actually buy and sell and monetize their investment. Of course, another consideration whenever you're fundraising is that you actually want to retain control. So I can share with you many horror stories of private companies raising money from PE or VC funds, and then getting screwed over badly because they have been given very unfair terms or very onerous terms on the company. So for example, maybe the PE VC fund would have a term that says, if you don't meet this much valuation in this year, I can take more control of your company. So you do have to be careful whenever you are raising money from PE or VC funds. On the other hand, if you choose to raise money and go for an IPO, the rule book or the listing rules for most public exchanges are like this thick, and you do have to make sure you comply with many of those rules. If not, you will be personally liable and you can get into trouble very quickly. And obviously, as with anything, the type of financing that you do will be very influenced by the cost and the time. So like I mentioned, in the IPO, you may spend up to 12 months to 24 months to list, as well as spending $1.1 to $1.5 million. In Hong Kong, I understand is 50% more expensive, probably double the cost in US. And if you raise money privately, typically if you do it yourself, it's the best. But by the time you find a banker or you find an advisor and you negotiate with the VCPE, you probably spend a lot of money in terms of fees and your own time and effort also. So you do have to measure where you are at this point of time. What type of fundraising do you want to do? Do you want to do a private fundraise? Do you want to do a public fundraise? And really balance the needs of your company, your shareholders, with the available options that are on the table. So we can see that the current way of fundraising, be it public or private, there isn't really a totally ideal situation. It really depends on whether you want liquidity, whether you want control, whether you want to save on your cost and time. And this is what me personally, as well as my founder team, we have actually personally experienced. So for our portfolio, we have raised money privately for multiple rounds, followed by an IPO. So we do know the pros and cons of a private and public fundraise. That's where we put heads together and then we thought, why isn't there a better way? Why isn't there a better solution? Why isn't there a better way for companies to have a more cost-effective solution, a more streamlined solution for them to both fundraise and get liquidity? Because I think it's also very important to consider liquidity whenever you are considering the type of fundraising, because if you are unable to get liquidity, then all the effort that you have put into the company doesn't make sense, right? I mean, you can be sitting on a company that is worth 100 million or 200 million, but if you're unable to buy and sell shares, then what's the point, right? So if you want to consider an IPO, you're spending so much money paying all the professional bankers and corporate secretary firms. So a lot of the cash that is left over for you might be very little. So what we have sought to do is that we want to provide a very cost-effective, a very streamlined way for companies to do what we call a private listing, where we are trying to combine the best of both worlds. We want to provide liquidity, not the full liquidity like in a public fundraise, but we want to provide enough liquidity. We want to give and allow the companies to retain control. We want it to be very cost-effective and to not be as onerous as compared to both the public and private IPO. At the same time, we do want to provide them global investor access and also combine all these factors to make it very compelling for companies to come and list. So basically, what we are trying to do is that we're also trying to also educate and position the company for eventual listing. So as I did mention earlier in the call, SGX, the Singapore Exchange, is our shareholder. And what we see is that sometimes it's a very big jump, or it's a very binary jump from a private company to a public company. Suddenly, one day, if you go IPO, you have to make announcements, you have to share your material disclosure, you have to have your insider trading policies, so on and so forth. And it's a very different, you need a very different management team when you are a private company versus what you are if you are a public company. You have to reformat your board of directors, you have to train or hire a new CFO, you have to train and hire your own executive team to learn how to deal with insider trading. So we do know that it's very tough for SME, especially those that haven't listed companies before. So we're also positioning our private listing as an intermediate phase approach towards a listing. So where we see this private exchange is that if you don't find that you're ready for an IPO yet, if you find that you're unwilling to go for the full cost, and if you want to train and learn how to make announcements, how to practice being a public company, you can also consider a private listing on 1exchange to sort of learn how to be listed, how do you enable shares trading, how do you do investor relations, how do you communicate to investors, and with the experience and with the track record of having different shares bought and sold traded on the private exchange, it gives you way more confidence to do an eventual IPO. It also gives your banker and your advisor way more confidence because there's already catchment and track record of shares being traded. So we do see that this is actually a way better way to approach an IPO by doing a private listing in between staying private before going public. So the value proposition we think is pretty clear. And for companies, obviously, it's a way to get liquidity at a lower cost and a lower time, and also what we call achieving partial exit. And also just to share what we do is that the way we do is that we are not listing the entire company, and that's how we can save cost. What we do is that we're actually listing, we're only listing maybe 5 to 30% of the company, and we have it through the SPV. So for company owners who, let's say they want to consider listing on, if you are, for example, if you are a Taiwan company that aims to, let's say, list on SGX to tap into the SGX market, right? Typically, you have to reincorporate your company to Singapore, meaning to say that you have to have a Singapore headquarters, and then you have to sort of like do some magic to sort of make your incorporation into Singapore. This costs a lot of time and this costs a lot of money. So what we do is that we don't want to cost any of that to the company. We want the company to be domiciled no matter where they are. So it could be Taiwan, it could be Thailand, it could be Hong Kong, it could be anywhere in Southeast Asia. What we then do is that we ask the company, okay, how many shares do you want to be listed and floated? We call this how big is the float? And this float then determines what is the potential level of buying and selling that needs to occur. We then use an SPV, we call it a special purpose vehicle, to then acquire these shares. So the trading occurs at SPV level. So for the company, which is yourself, this SPV will become a new shareholder of your company, but you will not be affected by the constant buying and selling. So this means that there's lower and less onerous reporting on your side, but at the same time, we can still allow trading and liquidity to occur for incoming investors. So for investors, we have built up a base of investors that are interested to invest in private equity and private securities. They're looking for growth companies, they're looking for pre-IPO companies, they're looking for high yield. And we do want to connect these investors to companies that actually meet our product specifications. And doing a private exchange, we also want to enable them to also trade in and out of a private company, which may include your company. So there's two situations, right? One situation is that you may choose to raise funds and you may choose to have your investors directly invest in your company. And this is, the way it's been done through the typical private fundraising. Whereas if you go through us, we provide a trading facility. So there's a couple more benefits. We not only can allow more investors to participate, because investors that are able to buy and sell their shares will be more incentivized to participate in your fundraising, as well as we are allowing the company themselves to more easily convert their existing shares and put them on exchange to sell. So we allow also existing shareholders to monetize their shares. So we do see value addedness on both sides of the table. And I think this one goes more into what are the various methods of fundraising. So we do allow for two types of listing methods. So one is that if you do not need to raise funds, so if let's say you're SME, you are profitable, your cash flow is positive, you have no need to raise funds. In fact, you are giving dividends out to your investors every year, but you want to be able to sell some of your shares, or you want to be able to allow some of your shareholders, angels, employees to sell some of their shares, not all, right, but some of their shares, meaning a sub-monetization in order to better incentivize them. You can do what we call a direct listing, and it's very fast. It takes about 1 month. The fees are very low, and it's basically a conversion of your existing shares into tradable shares of the SPV. The other way is if your company needs to fundraise, maybe let's say they want to fundraise $5 million first, that also can be done. So we do have to create what we call a campaign where we need to raise funds for this $5 million, and then we will list this $5 million on the exchange for trading. So it does take longer, but the benefit is that there is actually new money and new funds going into the company. So I think I'll just spend the next half of the presentation going more into case studies, because I think case studies are where probably it will make more sense and provide some relevancy and benchmarking for business owners such as yourself. So I think the first case study I'd like to share is a direct listing. This is a company that is based in Malaysia. It's a wellness, they basically own a suite of wellness and spa companies. And actually, despite COVID, or in spite of COVID, they've actually done pretty well. In fact, with COVID, more and more people are actually looking and taking care of their health. So this company is interesting. They have been in existence since 2003, and they have over 70 shareholders that, some of them actually want to buy more shares, some of them actually want to sell more shares, and it's very difficult and almost legally impossible for the company to facilitate this type of buying and selling between one another. So what they do is that they chose to undergo what we call a direct listing. And as you may remember, direct listing is where a company simply, converts their shares into listed and tradable shares on an exchange. So we work with the company. We ask them, okay, who wants to have their shares traded? And basically, we listed about $2 million of the company. And since then, we have started seeing quite a lot of orders and done trades from this Malaysian. So majority of the companies are Malaysian investors, and they are actually buying and selling on exchange. So the entire exercise, in terms of the listing and also the trustee fee, is about 10K a year, 10K USD a year, along with certain onboarding fees with regards to legal as well as setup fees, so on and so forth. So this is a very small price to pay in return for allowing shareholders to buy and sell the company, as well as raising the profile. So with this listing, right, it gives their user base, their customers, their clients a lot of confidence, because now Crigen Resources is a listed company now. So it actually also improve their visibility as well as improving their profile. And the interesting thing is that because we are entirely electronic and virtual platform, we did work with a Malaysian-based investor, but Crigen Resources, being headquartered in Malaysia, didn't have to reincorporate or didn't have to do anything funky. As I mentioned, all we did is we created a Singapore SPV, and then we lay it on top of the company, and the trading only occurs within the SPV. And this is basically what we did. So we did a virtual listing ceremony, as well as the various benefits that we mentioned. So the company is using our platform to make announcements and share reports with the investors. So the other study is another study that's also very interesting. So this is a fund management company. They have over $500 million AUM. And basically they are looking to not only raise money, but also to allow one of their founders to sell their shares. So what happened was that the company wanted to raise money to go to the next phase, in order to upgrade their research and their placement capabilities, and also raise manage more funds. So what they did is they actually raised $5.6 million with CapBridge, which is our sister entity. And we also further added on $2 million from the existing founders. So actually the entire float or what is listed and tradable on our exchange is 5.6 plus 2, which is $7.6 million. So basically, there's new funds of $5.6 million going into the company, as well as the founders are able to sell collectively 2 million of their shares in order to pay for their own life needs and so on and so forth. So two needs are being met. The company's financing needs being met, and the founders' ability to sell their shares and monetize their shares and get some cashback is also being met. At the same time, they went through this entire process without going through a full-blown IPO, without going through the 6 or 12 months roadshow, without going through the need to reincorporate and so on and so forth. Because what's exactly happening is that, like I mentioned, all we're doing is that we are adding and laying on a tradable SPV on top of these companies. So this one was it was pre-COVID, so we did a listing ceremony on SGX itself. So it was widely picked up over all the various news channels, and it was also one of the very first private exchange private listing. And the company also got a lot of good press releases and PR from this activity. So as a nutshell, we do see a private listing where, as opposed to a public listing, you are listing a small part of the company. You are using an SPV instead of the full company. And we are also only, because it's a private exchange, we are catering more to non-retail investors, slightly more sophisticated investors. So we do see many benefits. Obviously, it's lower cost. It's not as expensive as a 1 million or 1.5 million IPO. It is a shorter time. It can be as short as 1 or 2 months for direct listing. It is way more flexible. And obviously, we allow for liquidity while the company remains private and greater investor outreach. So I think in a nutshell, if your company is looking to fundraise, you're looking to expand your investor outreach, you're looking for some way to monetize and sell some of your shares, and you're looking to do all this at a cost that is cheaper and faster than the traditional methods, you can consider us, and we can have a conversation after this event, and then we can sort of do more assessment on the company. So I think the last part of the conversation or the PowerPoint is really the process. So this is really a very, very high level process. If we have more time, or we can have more and more one-on-one conversation on the detailed process. But basically what we do is that there's 4 major phases. One of them is the preparation. So we do need to assess the company. We need to determine whether they are fundraising, whether they want to convert their existing shares. We need to understand what's the valuation. You have to prepare the various documentation. And then we have to do the placement. So placement just means that we are basically issuing the shares. So we are issuing shares to new investors. That takes more time because we have to educate. We have to bring across the new investors. We have to bring them to sign the document and close the document, so on and so forth. So if you are fundraising, it takes more time. It can take anywhere from 3 to 6 to 9 months, depending on the company and depending on how many investors are there available to invest in the company. If not, right, the placement is very easy. If it's a simple conversion or a simple direct listing, then it's really a matter of assigning the shares of the existing investors to the SPV, and that's it. And lastly, we have the SPV creation. So we do have the ability, and we have already ready templates now for the creation of SPV. And this SPV is the one that will hold all the listed and tradable shares. And this SPV will be the one that will become a new shareholder of the company. And that's basically, so once SPV is done, is listed and traded, we do need the company to be compliant with our listing rules. So we do have some listing rules for investors. Company do have to make announcements. They do have to communicate this to investors through our platform. They do need to upgrade their investor relations to the platform. And they do need to provide certain basic materials. So they do have to provide annual audited reports. They do need to give material disclosures, so and so forth. Although we do operate similar to a listed company, because we also think it's beneficial to the company to upgrade themselves as well as enable and learn how to become a public company. So I think with that, I've come to the end of my presentation. I think, this just give a very quick overview about, the existing funding options, the private financing, the public financing, and the new financing, which is the private listing via the exchange. We are in early days, so we do have a pipeline of companies and we have listed companies, but we're always interested to talk to more companies that meet our target specifications. So the very hard criteria that you see here is that we are looking for slightly larger companies. So we are looking for companies that have raised at least 4 million share capital or have at least 2 million in revenue. And they've been operating for at least 2 years and they have working capital of at least 12 months. So these are the so-called the hard criteria. We do also have some soft criteria. So we have found that our solution, our fundraising and listing solution works best when there's a existing liquidity need and there are at least 20 or 30 shareholders in a company. So once the minute is listed, right, the value is there where your shareholders can start buying and selling, and this actually spurs activity and creates more confidence for more activity and more trading to occur on the platform. So with that, I end my presentation and I'm happy to have further discussion or take any questions. So over to you, Zach.
All right, great. Let me check the chat room. All right, so actually we have questions on the the investment requirements, but you have answered it at the very end of your presentation, which is the criteria to list. All right. Also, if you need any more information, you are welcome to check 1exchange on their website. It will be oneexchange.com. Right. So any other questions to Haiping? Leave them in the chat box. So I think we're not receiving any questions. So anything you want to stress on more, Haiping?
Yeah, so I think for us, right, we are in early days.
Yeah.
Do think of us as a way to get for those who are considering an IPO, do see us as a way where we're able to allow like I say again, a more cost-effective and a more facilitated, streamlined way to IPO, and that's basically exactly what we stand for. Yeah.
Yeah, it's a very new method to fundraising and to get new funds for another solution in the world right now. So we have an audience wanting to ask things, so I think he's typing his question. So in the meantime, I'll be asking my own questions. Is it okay?
Sure,
Right.
yeah.
So what companies are you guys actually looking into? Can you specify a few industries that might be more favorable to list on one exchange?
So for us, right, when we look at companies, right, we often ask ourselves, what do investors want? So in general, what we have seen is that investors are currently looking out for more, I would say, COVID resilient companies. So
All right.
I think even if they are willing to invest in traditional SMEs, they also are asking, we also do virtual shows with companies. So they're also asking them, what is your response or how are you able to pivot away from the COVID model? So I think industries like fintech, like e-commerce, online companies that are not as affected by COVID is receiving a lot of interest. We also are helping an automation company from Korea to list. So because they are able to automate, the manufacturing using robotics, they are able to also reduce and help other SMEs or other companies pivot to a more COVID resilient era. In terms of the we call it specifications. So in general, we have seen 3 types of specifications. So one specification is that investors are looking out for one of these 3 growth stories.
All right.
So this investment story is basically either they are looking for companies that can provide consistent guaranteed yield. So companies that are continually able to give dividend, they are very cash flow strong. They're able to provide 3-4% guaranteed or cumulative dividend every year. These are very popular with our investor base,
All
because the investor base sees this as, as opposed to putting my money in a bank or in debt, I rather invest in a company. I can greater diversify my asset. So that's
right.
the first investment story.
All
The
right.
second investment story that we see is also high yield. So
Mm-hmm.
companies that are having a lot of dividend, they may be growing faster, they may be property companies, but they're unable to provide guaranteed yield. So typically investors are then requesting, okay, can you return 10 to 12% of my dividend? So these are for companies that sometimes do well, sometimes don't do well, but when you do well, they will be able to provide dividends back to the
Greatly.
company.
Mm.
So that's
All
the
right.
second type.
Right.
The third type are those what we call growth companies. So
Mm-hmm.
this company, you invest in them, and you're looking for the big pop, right? So
Mm-hmm.
basically, we want to allow them to invest in pre-IPO companies,
All right.
and maybe if they take 2 trips to IPO, then investors are hoping that this company will either be a multi-bagger. So what we mean by multi-bagger is that they can either triple or quadruple their valuation in 3 or 4 years, and then this will then drive the returns for the company.
All
Uh,
right.
but then if they can't reach it, most of the time the company will become zero or be worth nothing. So basically, these are the high risk, high return type of investments.
Mm-hmm.
So in the past, we do have situations where we have helped uh, venture back or venture growth companies, and sometimes our investors are also looking out for these venture growth companies in order to better diversify their portfolio. Yeah.
All
So
right.
in summary, there's the guaranteed yield, the high yield, and also the growth story. Yes. So these
All
are the
right. So
three types which investors are looking out for.
okay, great. Thank you, Haiping. And now I have received the questions from our audience. All right. So what about the market makers? Is there any market maker in your stock exchange trading system? Right. So,
So
for example, compared with Indonesian stock exchange, there are a lot of market makers who can manipulate the stock price movement lah. So, is there any of sort in the stock trading system?
So we do not have market makers at this point of time. So what we're trying to do is that we're trying to reduce the cost and make it a very quick, a very easy step process for companies to be listed. So for us, we are private exchange. What we do in a nutshell is that we create a SPV, we make the SPV tradable, and then the SPV then acquires the shares of the underlying company. So our exchange right now is a private exchange. What this means is that it's very OTC or over-the-counter style.
Mm-hmm.
Sellers and buyers have to put their buy order, and all the buyers can see all the sell orders and then fulfill them in full.
Mm-hmm.
So we don't really have automated matching at this point of time. So what we believe is that automated matching adds a lot of cost
Mm-hmm.
to us, and then we have to pass it on to the company. So we have chosen not to go for those approaches. We have chosen to make it more similar to the frequency of which we expect for private companies at this growth stage.
Understood. All right. So hopefully that answered your questions. All right. So is there any other questions? If not, we'll be ending the seminar for today. All right. Thank you, Hyping, for the
Thank
great
you. Thank
sharing
you.
with all of us. All right. I hope everyone you have got something to take away, because I think Hyping has given us a really great insight on the future, like how we can do fundraising in a very different way from before. All right. So if you have any questions you want to ask, feel free to check the chat box, because we have left our contacts there. So feel free to drop them a mail or visit their website for more information. All right, so hopefully you guys can stay well and take care of your health wherever you are. Hopefully we can all stay healthy and make it through the COVID pandemic, and we will strive in the future. All right. All right, thank you everyone. Thank you,
Thank you.
Hyping.
Thank
Thank you for
you.
the speakers. Thank you for the panelists. All right, YS, Ivan. Thank you everyone, and thank
Thank
you to
you.
our audiences for your time in the webinar. All right, thank you everyone.
Thank you. Thank you. Bye bye. Good night,
Bye
everyone.
bye.